Good morning. It's Market Day Report. Another week of trade, and we're up and trading right now. Let's go to the corn market. How are we trading? We're continuing the trade from overnight, moving higher, 439 and a quarter on that corn market. That's up 3 3/4 cents. From corn over to soybeans in the November contract, down 3 ticks now at 1034 3/4. We're trading near the low of this early session. Soy meal contracts. Now, soy meal was lower on Friday, but moving a little higher today. Flash sale reported overnight to the Philippines, 145,000 metric tons of soy cake and meal. Now, soy oil has been really a bright spot in the market, but we had a sell-off last week on some fears that maybe we won't get quite the number we were hoping for from EPA on the RFS, the volumetric obligations, the RVOs, and that prompted a limit move lower last week. Market still trying to recover as we're lower across the board. Over to the wheat market, and we're seeing higher trade in Chicago, 535 3/4. That's up 10 3/4 cents. Kansas City is up 12 3/4, 529 and a quarter. Spring wheat December contract is up 6.5, 612 3/4, and the cotton market up 67 at 68.34. Tommy Grisafi's with Nesvick Trading. Tommy, interesting way to start the new week.
Yeah, that news came out late Friday with the debt, what they were doing with the debt, Moody's downgrading. I've seen this before. It happens, and sometimes the markets. We'll see how it digests. The stock market sold off late Friday. I'm talking late, 3:45 when the futures are still open. But most interesting to me today, Tony, we're seeing the markets adjust. Big spike in gold overnight. We have the bond market selling off. There was also some news that China doesn't own as many bonds as they used to, and so that's going on the outside markets. As far as grains, I'm shocked how short the funds are with what we could have with weather here. Funds are really hitting the gas here on the short side. So we'll see what happens with that. It could, no guarantees. It could provide some really nice opportunities, but we're going to need some heat, or we're going to need less planted acres. Now, with that weather report we just watched that Mr. Jeff showed us, there's a lot of rain happening in parts that are trying to get this crop planted. So if they can't get the final acres planted, that could become interesting. Usually they do. So what's the bull got to stand on as corn closed at multi-year lows or yearly lows on Friday? We're going to need a weather event, or we're going to need some demand here with the trade deal. So we'll see. Everything you talked about opening up in the bean oil, interesting. What happened last week, no shortage of anything. And it's just Monday. It already feels like Friday, my friend.
Absolutely. You mentioned the gold market. Quickly going back over to it. Moving higher, is this tied back over to the Moody's announcement?
Yeah, and you can just put gold down when you look at the volatility. Gold typically now has a $70 range every day. It's nothing to see it up 50, down 50. One day a week ago, I think we had a $130 range. But gold, when you're 3,200, it 1% is $32, right? So to see it up or down 60 is just a 2% move. But yeah, tied to Moody's, people are looking for other assets. We did see a spike in Bitcoin last night. I don't want to misspeak. I kind of feel like Bitcoin hit all-time highs last night. 107,000 for a Bitcoin. I'll check on break. And then Bitcoin is now sold off. So a spike in Bitcoin last night, a spike in gold. Bonds are selling off, which means interest rates are going up, my friend.
All right. Hang on. We'll come back. We'll pick up another market that's been on fire as of late. Is there more fuel to add to that fire? We'll find out. Market Day Report continues in a moment. USDA out with a report last week. I thought it was kind of interesting dealing with livestock. They're expecting beef production to drop 5% next year, 2026, and prices will reach all-time highs, new highs in 2026 based upon that. We'll have more on that throughout the morning. Right now, how are we trading live cattle? Well, mixed. That front month is down a dime at 212.25. Now it's up 2 pennies. 15 higher on the August at 206.90. Will we retest that $300 range for feeders? Well, we might, but we're lower right now, 297.12. It's off 47 on the August. And then hog market has been higher the last 2 sessions. We're a little lower right now with the July off $1.02 at 103.15, still 102.82. Make that 102.80 on the August. It's off 82. Let's go back to Tommy Grisafi, Nesvick Trading. Thoughts on the proteins?
Never a dull moment over there. That's still one of the markets that you can go to the washroom and have a different price when you come back. A lot of information constantly being digested. The cattle market's at the point where people are really, really watching the demand and saying, can it keep up? But I got to tell you, from the festivities we had at our house this weekend, there was no shortage of grilling out. We had with the American lunch. We had hot dogs, hamburgers, and of course we smoked some chicken on the Traeger. So we're still consuming a lot of protein over here, and it's just a lot more expensive. There's no getting around it. When I went to the store yesterday, I put my credit card in the machine. I try not to look at the bill. You're going to need the food. Calories are going to be needed. People around the world need to eat. No different, Tony, than when I spoke, when everyone said, when cattle sold off during the when we started the trade war, cattle don't know there's a trade war. They're going to eat no matter what. So animals are going to eat. People are going to eat. We're coming into grilling season. After that, all eyes on can this price stay this high and can demand stay this good? We'll see. But a record time and a joyful time here for cattle producers. Caution, though, it could get a little scary.
All right, quickly, let's look at the energy market. We saw a higher trade on Friday for WTI. We're a little lower right now, 62.33 off 16, but I think the bigger story there is that $63 mark on the June for the high. Concerns?
Well, we had $55 crude oil just a week and a half ago, and we shot up to 63. Looks like our range right now in crude is 55 to 65. If we do dip down to 55, I do believe they're going to start to fill up the strategic reserve. If you remember, the United States government made a great trade and sold an incredible amount of strategic reserve when crude oil was above 100. Not everything our government does. They don't do everything poorly, Tony. So nonetheless, filled up yesterday, 305 locally here in Indiana for fuel. Driving season goes along with grilling season. We're at peak demand for both right now, my friend.
Yeah, and we'll end on nat gas, just throwing that up. It is lower this morning, and that's no surprise because nat gas is hitting 5-week lows today. Tommy Grisafi's with Nesvick Trading. Great to see you. We'll see you again soon.
All right, thanks for the update.